Do you remember when Wall Street decided they wanted to become your landlord? A few years ago, institutional investors bought up entire neighborhoods across the Sun Belt, driving prices to the moon and forcing normal people to bid against multi-billion-dollar algorithms just to get a standard 3-bedroom house. But here is the hilarious part. They completely missed half the country. While private equity was busy overpaying for stucco boxes in Arizona and Florida, they entirely abandoned a massive swath of legacy American cities. And now the joke is on them. Today, we're looking at 14 hidden markets where the hedge funds refuse to go, and where you can literally buy a solid brick house for the price of a used Honda Civic. This topic matters right now because the national housing narrative is a complete lie. The mainstream media wants you to believe that the American dream is entirely dead and that you will be renting a tiny pod in a mega city forever. Outsiders look at these abandoned legacy towns and immediately write them off as frozen, rust-covered wastelands. They completely misunderstand the math. While the rest of the country is suffocating under heavy mortgage debt, these towns have median home price to income ratios that look like they belong in the 1990s. We are talking about places where homes are practically free, sitting on quiet streets with localized short sale inventory spikes, just waiting for someone to show up with a modest down payment. If you have a remote job, a tolerance for winter weather, and a desire to actually own something, this is the ultimate geographic arbitrage. Let us count down the 14 hidden towns where the algorithms refuse to look. Number 14. Syracuse, New York. Welcome to the snowiest city in America, where the extreme cold keeps the Wall Street investment algorithms safely at bay. You can easily find historic multifamily homes or solid brick single-family houses floating in the $40,000 to $60,000 range, largely because out-of-state investors are terrified of managing snow removal. The culture here is deeply tied to college sports and surviving the winter, meaning your neighbors will actually talk to you and help you dig your car out of a snowbank in January. The massive trade-off is the property tax rate, which is so aggressively high it will occasionally make you feel like you are paying rent directly to the state of New York. But hey, at least your mortgage is low enough that you can afford to buy a really nice ergonomic snow shovel. Number 13. Youngstown, Ohio. Youngstown is a city that the steel industry dumped decades ago, and institutional investors have been actively avoiding it ever since. Real estate portals are currently flooded with inventory here, with median list prices routinely dipping below $50,000 for homes with actual front yards and mature trees. It has an incredibly resilient blue-collar culture and some of the absolute best, cheapest Italian food you will ever eat in your entire life. The downside is that the local economy is still desperately trying to figure out what century it is in. So you absolutely need to bring your own remote job if you want to survive. It is the perfect place to build long-term wealth, provided you do not mind looking at a few abandoned factories on your morning walk. Number 12. Erie, Pennsylvania. If you want to live on a waterfront without paying Miami prices, you just have to accept that your ocean is actually a freezing Great Lake. Homes in Erie can be snatched up for roughly $70,000 to $90,000. Representing some of the absolute cheapest coastal adjacent real estate on the planet. The summers here are genuinely beautiful, offering a classic American waterfront lifestyle with cheap boating, state park beaches, and spectacular sunsets. The brutal trade-off is the lake effect snow, which will bury your house so deeply in January that you will forget what the sun looks like for about 3 months. You get a massive beachfront property discount entirely because the beach is covered in solid ice half the year. Number 11. Flint, Michigan. Flint has been the punchline of every national infrastructure joke for a decade, which means the hedge funds would not touch it with a 10-foot pole. You can easily buy a house here for $30,000 to $40,000, and short sale inventory is always readily available for anyone willing to put in a little cosmetic work. The people who stayed in Flint are fiercely loyal to their community, supporting a surprisingly vibrant local arts scene and one of the best farmers markets in the state. The obvious downside is that you will spend the rest of your natural life answering highly concerned questions from your relatives about the quality of your tap water. It is the only real estate market in the country where throwing in a premium water filter actually adds 10% to the total home value. Number 10. Decatur, Illinois. Decatur is the agricultural processing capital of the world, making it the perfect sanctuary for anyone running away from corporate landlords. The median home price to local income ratio here is incredibly low, with plenty of move-in-ready homes sitting securely between $60,000 and $80,000. It is a quiet, highly predictable slice of the Midwest where traffic does not exist. Life moves slowly, and Friday night football is the main social event of the week. Depending on the wind direction, the entire town occasionally smells heavily of roasting soybeans and industrial corn processing. You are literally smelling the agricultural economy, which is a very small price to pay for a microscopic mortgage. Number 9. Gary, Indiana. Gary is the childhood home of Michael Jackson and the current home of some of the most aggressive real estate discounts in North America. You can find properties here practically given away in the $20,000 to $40,000 range, largely driven by a heavy spike in municipal tax foreclosures. You are sitting right on the southern edge of Lake Michigan, with a shockingly fast and cheap train commute directly into downtown Chicago. The urban blight is inescapable, and you will have to invest serious cash into security systems and renovations just to make a distressed house habitable. It is an investor's absolute paradise, assuming your idea of paradise involves extensive foundation repairs and full copper wire replacement. Number 8. Rockford, Illinois. Rockford is a town that sits just far enough outside of the Chicago metro area to completely escape the attention of private equity firms. Local inventory spikes have kept prices heavily suppressed, allowing buyers to scoop up massive, historic architectural gems for under $120,000. The city features gorgeous riverfront parks, beautiful botanical gardens, and a highly affordable minor league sports culture that feels incredibly nostalgic. The property tax rates are notoriously aggressive, quietly eating away at the massive financial savings you got on the initial purchase price. You save a fortune on the mortgage, only to immediately hand that exact amount of money over to the local county tax assessor. Are you currently trapped renting a tiny apartment in a major city, or are you actually brave enough to buy a house in one of these legacy towns? Drop a comment below and let me know if you would happily trade perfect weather for a $40,000 mortgage. And while you are down there, gently tap the like button so the algorithm knows we're out here exposing the real estate matrix. Let us get back to the countdown. Number 7. Toledo, Ohio. Toledo is nicknamed the Glass City, which is highly fitting because the local real estate prices have been completely shattered for years. You can easily navigate the local listings and find well-maintained, solid 3-bedroom homes hovering right around the $70,000 mark. It sits right on the edge of Lake Erie, offering fantastic metro parks, a world-class free art museum, and a deeply relaxed blue-collar vibe. The winters are relentlessly gray. The job market is heavily dependent on legacy manufacturing, and the trendy nightlife is virtually non-existent. It is the perfect place to move if your ultimate life goal is to go to sleep by 9 p.m. in a house that you actually own. Number 6. Scranton, Pennsylvania. Thanks to a certain television show about a paper company, Scranton is world famous, but institutional investors still treat the housing market like it is radioactive. With a high rate of older housing stock turning over, you can snag a classic American home here for well under $100,000. It is nestled in a scenic valley with easy access to cheap skiing, beautiful hiking trails, and a surprisingly strong local pizza culture. The local infrastructure is definitely showing its age, meaning you will become intimately familiar with the concept of defensive driving and pothole avoidance. You get to live in a pop culture landmark, provided your car suspension can handle the local roads. Number 5. Peoria, Illinois. Peoria is the classic American test market, but apparently, Wall Street decided not to test their real estate purchasing algorithms here. Driven by sluggish local population growth, homes regularly sell in the $60,000 to $90,000 window, leaving plenty of room in your budget for renovations. It is perched on a beautiful river, offering a quaint downtown district, gorgeous historic architecture, and an incredibly low overall cost of living. The local economy is heavily tethered to heavy machinery manufacturing, meaning if Caterpillar sneezes, the entire town catches a financial cold. Buying a house here is a fantastic hedge against inflation, as long as you enjoy watching barges slowly drift down the river for your weekend entertainment. Number 4. Akron, Ohio. Akron is the rubber capital of the world, where the real estate prices bounced once in the 1990s and then just stayed on the floor. Short sale and foreclosure inventory is highly accessible, putting the median entry price for a decent fixer-upper at roughly $50,000 to $60,000. You get to live right next to the beautiful Cuyahoga Valley National Park, giving you elite outdoor recreation on a shoestring budget. The downtown area has been struggling to reinvent itself for decades, leaving the urban core feeling a bit hollow and empty after business hours. It is a fantastic place to raise a family, assuming your family is completely fine with never going to a trendy nightclub again. Number 3. Binghamton, New York. Binghamton is a town in upstate New York that time forgot, and institutional buyers completely ignored. You can score huge, old Victorian homes that need minor cosmetic work for less than $80,000, which is basically the price of a luxury SUV. It operates mostly as a college town these days, offering cheap local diners, historical carousels, and a quirky small-town charm that feels highly authentic. The cloud cover is legendary, meaning you will experience exactly 3 days of unbroken sunshine per year. You will save hundreds of thousands of dollars on housing, which you can then spend entirely on artificial sun lamps and vitamin D supplements. Number 2. Muncie, Indiana. Muncie is a place so aggressively average that sociologists actually used it as the baseline for Middle America, which naturally terrified the hedge funds. Housing data shows an incredibly low price-to-income ratio, with perfectly fine starter homes clearing the market at $60,000 to $70,000 all day long. It is a quiet university town with an incredibly slow pace of life, where the biggest traffic jam happens in the drive-through line at the local pharmacy. The industrial boom is long gone, leaving behind a sleepy local economy that requires you to bring your own ambition and remote income. It is the ideal destination for anyone who wants their real estate portfolio to be as aggressively average and stable as their hometown. Number 1. St. Joseph, Missouri. St. Joseph is the historic starting point of the Pony Express, and the local real estate market is still moving at exactly that speed. You can purchase a beautiful, massive brick home with incredible historic bones for well under $100,000. Largely because out-of-state investors refuse to look at the map. The architecture is genuinely stunning, the local community is tight-knit, and you are just a short highway drive away from the major amenities of Kansas City. The town has struggled with severe population decline, meaning you have to be highly careful about which specific street you buy on to avoid heavy blight. It is the final frontier of affordable American housing, assuming you are brave enough to pioneer a neighborhood that the algorithms completely forgot. At the end of the day, the real estate market is a game of attention. Wall Street threw billions of dollars at the Sun Belt because it was trendy, flashy, and looked great on an investor prospectus. They inflated a massive bubble, and now that bubble is dealing with skyrocketing insurance costs, extreme weather, and a complete lack of affordability. Meanwhile, these 14 towns have been sitting in the background, quietly offering solid infrastructure, cheap brick houses, and a complete escape from the corporate rental trap. Yes, there are risks. You are buying into legacy economies, brutal winters, and aging infrastructure. It takes a very specific type of person to look at a Rust Belt city and see a financial fortress. But when the alternative is spending 70% of your income to rent a drywall box from a faceless hedge fund, dealing with a little snow suddenly seems like a brilliant strategic move. Will these forgotten towns eventually see a massive renaissance as remote workers flee the expensive coasts, or are they destined to remain cheap, icy outposts forever? Let me know your thoughts down in the comments. Make sure you subscribe for more brutally honest housing data. Keep your eyes on the Midwest. And never pay $1 million for a house when you can buy a whole street in Ohio for the same price.